Can you really build a six-figure portfolio by the time you're 30? Yes. And today, I'm not just going to tell you it's possible. I'm going to show you the exact no-fluff blueprint that got me to $100,000 and how you can use it to build your own, starting now. My journey to $100,000 didn't start with some secret stock tip. It started with a wake-up call. I was in my mid-20s, working a decent job, but living paycheck to paycheck. I remember looking at my bank account one day and feeling this wave of panic. I had nothing to show for all my hard work. My savings were barely enough to cover an emergency, let alone build a future. I was playing the game all wrong, trading my time for money with nothing left over. That was the moment I realized that if I didn't change something, I'd be in the exact same spot in 10 years. So I decided to get serious about my money. I spent months reading every book, watching every video, and learning everything I could about personal finance and investing. I wasn't looking for a get-rich-quick scheme. I was looking for a real, sustainable path to financial freedom. That's when I created my first and most important money rule: pay myself first, but with a twist. It's not just about saving, it's about automating your wealth. The old way is earn money, pay bills, spend on wants, and then save whatever's left. That almost never works. The new rule is earn money and immediately, automatically, transfer a set percentage to your investment account. Before you pay rent, before you buy coffee, before you even think about your spending money for the month. For me, it started with just 10%. Every single paycheck, 10% was automatically moved into my brokerage account. It felt a little tight at first, I won't lie. But within 2 months, I didn't even notice it was gone. My lifestyle adjusted. This one simple automated habit was the foundation of everything. It removes willpower from the equation. Your wealth builds on autopilot, whether you're feeling motivated that day or not. Okay, so where did that automated money actually go? This is the blueprint, the part you can copy and paste for 2026 and beyond. Forget trying to pick the next hot stock. I put 90% of my investment money into one thing: a low-cost, broad market index fund, specifically an S&P 500 index fund. Why? Because it's like buying a tiny piece of the 500 largest companies in America. It's diversified, it's simple, and historically, it has delivered an average annual return of about 10% over the long term. You're not betting on one company, you're betting on the entire US economy. This is the core of your portfolio. It's boring, and that's why it works. The other 10%? That was my fun money, or what I call my satellite portfolio. I used this to invest in individual companies I believed in long term, or maybe a specific sector ETF like technology or clean energy. This small allocation scratched my itch to be more hands-on, but it was never enough to sink my portfolio if I made a bad pick. The key is consistency. Every single month, my automated deposit would buy more shares of that index fund, a strategy called dollar cost averaging. It means you buy whether the market is up or down, which smooths out your purchase price over time. This simple 90/10 split is powerful and protects you from making emotional decisions. Hey! So how does this actually add up to $100,000? Let's do the math. Let's say you're 24 and you start investing $500 a month. That's about $125 a week. At a conservative 7% average annual return, which is below the historical average to account for ups and downs, you would have over $41,000 in 5 years. Now, what if you could increase that amount? Maybe you get a raise or start a side hustle? If you can bump that to $800 a month, you'd be at nearly $67,000 in the same 5 years. And if you can manage to invest $1,000 a month, you'll cross the $100,000 mark in just under 7 years, right around your 31st birthday. The numbers don't lie. It's not magic. It's consistent investing in compound growth. The hardest part is getting started, but once that snowball starts rolling, it gets bigger and bigger on its own. Now, you might be thinking, the market looks uncertain. Is 2026 really the best time to start? Let me reframe that for you. Uncertainty is an investor's best friend. When people are fearful and the market is down or sideways, that's when assets are on sale. Think about it. Would you rather buy your favorite things when they re-full price or when they re-discounted? It's the same with investing. The biggest mistake young investors make is waiting for the perfect time to start. The perfect time was yesterday. The next best time is right now. By starting in 2026, you're giving yourself the most valuable asset of all: time. Time for your money to compound and grow. Every year you wait is a year of potential growth you can never get back. Remember, we're not timing the market. We're building time asterisk and asterisk the market. A volatile market is an opportunity to buy more shares for less money, setting up your future self for massive success when the market inevitably recovers and climbs higher. Building wealth is 20% strategy and 80% mindset. I can give you the blueprint, but if your mindset isn't right, you'll sabotage yourself. First, you have to shift from a consumer mindset to an investor mindset. Instead of asking, what can I buy with this money? Ask, how can I make this money work for me? Every dollar you have is a little employee. You can either spend it and it's gone forever, or you can invest it and it will go out and earn more money for you. Second, you have to embrace delayed gratification. It's about saying no to the small, instant pleasure of a new gadget or expensive dinner, so you can say yes to the huge life-changing freedom that a six-figure portfolio provides later. Finally, and this is crucial, you must stop comparing your journey to others, especially on social media. People only post their wins. You don't see their struggles, their bad decisions, or their debt. Your only competition is the person you were yesterday. Focus on your own progress, your own plan, and celebrate your own milestones, no matter how small. A healthy money mindset is your greatest shield against fear and greed. So, let's lay out a hypothetical year-by-year roadmap to 100,000. Let's say you're 24, year one. You start investing $500 a month. By the end of the year, with a modest market return, you have about $6,200. It doesn't seem like much, but you've built the habit. Year two, you get a small raise and bump your contribution to $600 a month. Now your portfolio grows to about $14,500. You're starting to see the compounding effect. For year 3 and 4, you continue investing and your portfolio value climbs past $30,000. You start a side hustle and manage to increase your monthly investment to $1,000. The growth accelerates. By the end of year 5, at age 29, you're sitting on around $65,000. Now, the magic really happens. The returns your money is generating each year are becoming a significant part of the growth. In the next 1 to 2 years, that consistent $1,000 monthly investment combined with the power of compounding on your existing balance pushes you right over the $100,000 finish line before you even blow out your 31st birthday candles. Not a sprint, and each year builds on the last. Look, I'm not a financial genius. I'm just a normal person who got tired of being broke and decided to make a change. The plan I shared with you today isn't complicated. It doesn't require a finance degree or a six-figure salary to start. What it requires is discipline, patience, and a belief that your future self is worth investing in. The feeling of seeing your portfolio cross that $100,000 mark is incredible, not because of the money itself, but because of what it represents: security, freedom, and options. It means you're no longer a slave to your next paycheck. You have a safety net that allows you to take risks, pursue passions, or simply sleep better at night. You can do this. The blueprint is right here. The only question left is, will you start? Thank you so much for watching. If you got any value from this video, please hit that like button and subscribe for more no-nonsense guides to building wealth. Let me know in the comments when you plan to start your journey. See you in the next one.